All right, I want to get back to our panel now because we're expecting the trading halt to be lifted any moment now. We know the S&P 500 fell more than 7% moments after the opening bell, which is what halted trading for 15 minutes. We'll see if cooler heads prevail once we get back up and running. Paul, what are you going to be doing today? And then, of course, tomorrow, when a lot of folks might not want to hold on to stocks over the weekend, are you participating in this market? And if so, how?
I think on the big panic down days, at least for me, I'm usually more comfortable waiting till the end of the day, seeing if anything is kind of that cloud with a silver lining, maybe looking for stocks that are really outperforming. But usually if we're going to close at or near the lows, I will sit back and probably do nothing. I'm sure I will spend a good part of my day with calls and emails with clients. Whatever meetings I have in the calendar will go forward, but I never find a ton of usefulness portfolio-wise in kind of the widespread panic down days. Perhaps if tomorrow's close is a little firmer, I may look to find some names that I was looking at before, like Amazon and Alibaba, and maybe even Paul, go to the other side of the curve and look at some.
Let me get in there real quick, Paul.
Energy MLPs. Yeah, Brian.
You're seeing trading reopen right now. The Dow is reopening after a 15-minute halt. Dow is now down 1,796 points. The S&P 500, NASDAQ also under severe pressure. And guys, we've talked to a lot of folks this morning. I still don't get the sense buyers are willing to step into this market. You know, to add on what Alexis asked Paul, Victoria, are you inclined to wade a little bit into this market, into a weekend that might have another avalanche of bad news?
Yeah, on a day where we're having such large down movements, you want to be extremely cautious. Paul is correct on that. So I'm not sure we would go in today. We'd really like to see how things shake out through the day. Do we have more information coming out of the administration or out of other central banks? The ECB did not lower their rates today, but they did increase their QE. We saw the BOE do some measures yesterday. So I would like to get a little more information and see the coordination that's going on between fiscal and monetary policy, not just in the U.S., but globally. And that would give me a better feel as to where we're going to go over the next few days and where I would like to have an entry point for some names.
Victoria, you're seeing the Dow now down about 8.6%, down more than 2,000 points. And there's, again, a continuation of bad news. The President Trump's speech yesterday regarding the 30-day travel ban. You have more bad corporate news this morning, notably out of Carnival with halting a lot of their ships in service. Corporate America is crying out for help. And the lack of a government response, I think, is getting a lot of people worried.
Yeah, Paul, what are you expecting now? I mean, I would imagine we're going to get a lot of earnings warnings trickling into this market, or perhaps there's going to be an avalanche. What are you expecting, and what's that going to do to the market? Because have we even priced in the fact that a big number of companies are going to come out and cite coronavirus for missing revenue, for missing earnings, and their outlook is going to be bleak?
Well, I think this 25% plus decline is pricing in a lot what corporate America is going to say in the next 1 to 4 weeks for sure. I think one of the signs the markets will become more comfortable is when you get some high profile names, give some super dire warnings, bad earnings, withdraw guidance, but their stock doesn't go down. That'll be the first sign that markets are becoming comfortable, wrapped around the idea of what GDP is going to be and what earnings are going to be in the United States. So again, I don't think it's going to be you wait until all the good news comes back. Markets will bottom long before that. But until then, you've got two people chatting now who have no interest in further dipping their toes in. And I imagine if you look at the depth of people buying right now, there's probably only a very small book of bids behind the market. And that's why you're seeing a waterfall decline. People are unwilling to step in. Very similar to what you saw in the crash of 87 and in the fourth quarter of 08.
I think what you're seeing partially priced in the market, it reflects. I was on a Zoom call last night with former Cisco CEO John Chambers, and he made a point, and he's a man that has lived through many crises before, where it's unlikely this will last 2 to 3 quarters. It might extend 5 or 6 quarters, which means the coronavirus outbreak may hurt economic activity in 2021. I think that's when investors are starting to price in here. Victoria, would love your thoughts on that.
I think you're absolutely right, Brian. I mean, we look at some of these companies that have not just lowered their guidance going forward, but they've absolutely just pulled it completely off the table because they have no idea how the virus is going to affect them going forward. A lot of that has to do with the fact that we don't know the duration. We assume that we're 2 to 3 weeks behind Europe, and Europe is 2 to 3 weeks behind China. But I'm not sure that we can actually rely on that because we don't have the testing going on, as Alexis mentioned earlier. I heard this morning that we're at capacity for perhaps 17,000 people that could be tested daily, but the tests aren't where they need to be at this point. We've got to ramp that up. Once we get better information, then those unknowns start to drift away a little bit, and people will feel more confident about what earnings expectations are, what the guidance is, and that will be their cue that maybe they want to get back in the market a little bit. But even saying that, we've still had new accounts come in every day over the past couple weeks. So people are willing to take a little bit of a chance, but they want to be extremely conservative.
Really quick, when they're coming into the market, where are they putting their money?
We're seeing it a lot on the fixed income side, which is not surprising, although we have to walk through with them that we don't want to invest further out the curve right now because of where rates are. That's that short liquid component that we like to work with. Yep. But we're also seeing it in our covered call strategy where you have options that you can go in and really take advantage of some of the volatility. I mean, look at the VIX. We were up, with a 5 handle on that earlier. It was like 54, 55. These are levels we haven't seen in quite a while. So there are some places you can try to take advantage of some of this volatility.
Jared, back to you.
Yeah, we're looking at the Dow heat map here. The Dow is down about 2,000 points. A lot of these stocks just getting whacked beyond belief. Apple down nearly 8%, Microsoft 5%, Visa down 7 3/4, Headbin down nearly 10%. But check out Boeing. Boeing is down another 15% to about 160. And then we have Nike, that's down 11%. If we take a look at the sectors that are leading today, well, look at this. Healthcare is the best off, and it's down 6%, followed by tech and communication services. Those are all outperforming the S&P.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.